Hello and welcome to the Business Standard Morning Show. I'm Kanishka Gupta and let's have a look at the stories for the day. Come Diwali, and people of several metro cities including Delhi, Mumbai, Kolkata and Chennai will be able to enjoy the high-speed 5G network services. The announcement was made on Monday by Mukesh Ambani at the 45th Annual General Meeting of Reliance Industries. What are the other key announcements made at the event? Watch our next report to find out.
India's most valuable company, Reliance Industries, held its 45th annual general meeting on Monday, with Chairman Mukesh Ambani making a slew of announcements. The AGM was held virtually for the third time in a row. After Reliance Jio bought spectrum worth $11 billion in the $19 billion 5G spectrum auction, Ambani laid out the timeline for the launch of Jio's 5G services. Jio is targeting a Diwali launch for 5G in top cities including Chennai, Delhi, Kolkata, and Mumbai, before expanding across India by December next year, which is 18 months from now. The telecom major will deploy standalone 5G, which won't depend on its existing 4G infrastructure. Hence, the delivery is expected to be faster. Reliance is investing $25 billion to build the pan-India 5G network. Jio also announced its foray into private 5G networks, adding that it is working with Google to develop ultra-affordable 5G smartphones for India. Akash Ambani, who replaced his father as the chairman of Jio, announced the launch of Jio AirFiber service and the Jio AirFiber Home Gateway device, a wireless Wi-Fi hotspot connected to Jio's 5G. It promises fiber-like gigabit speed internet over the air without any wires. JioFiber customers can opt to use a new service called the Jio Cloud PC, which offers virtual PC hosted in the cloud. Targeted at students, gig workers, and small businesses, customers will pay only to the extent they use the cloud PC. The telecom major said it will expand its partnership with Qualcomm to develop cloud-based 5G solutions for India. Isha Ambani, executive director of Reliance Retail Ventures, demonstrated the JioMart integration on WhatsApp. This will enable users in India to browse through JioMart's entire catalog, add items to the cart, and make the payment to complete the purchase, all without leaving the WhatsApp platform. Isha Ambani further announced that Reliance will launch its FMCG business this year as it takes its private label brands to general trade. Mukesh Ambani said Reliance will invest $9.4 billion in the oil to chemicals business over 5 years to expand capacities in existing and new value chains. Reliance will strengthen its polyester and vinyl chains through the building of new facilities and expansion of existing units, as well as setting up a carbon fiber plant. Expanding on the previous plan to invest over $10 billion to build 4 gigafactories at Jamnagar for solar cells and modules, fuel cells, batteries and green hydrogen, Ambani announced a plan to set up a 5th gigafactory for power electronics.
I think the company's business expansion, along with the profit margin, is now being systematically seen growing, and the size of the company will double from here as far as I think the profit is concerned. It's an important aspect that Jio could possibly be the leader as far as the higher amount of, I think, generation of profit is concerned, because on a 2 lakh crore of additional investment in 5G, they could easily turn, I think, 1 lakh crore of EBITDA. And with current existing EBITDA of 50,000 crore, I think Jio would be 1,50,000 crore EBITDA making business versus conventional O2C business of 50,000 crore. So this is a big development which is happening. And this also clears the path for Jio's listing, because if you are putting 2 lakh crore worth of additional investment in Jio, quite possible that I think you may want to go for the listing separately of the company. So this is again, I think, a silent point which is very, very important.
The country's second richest man announced his family succession plan for the group. when he listed the separate businesses his 3 children will lead. Akash will head the digital business housed in Jio. His twin sister Isha will lead the retail business, and their younger sibling Anand has joined the new energy business. Ambani said the siblings have inherited his father and RIL founder Dhirubhai Ambani's mindset. However, Ambani insisted he isn't retiring yet and will continue to provide hands-on leadership as before.
There were some concerns around aviation safety due to the 5G rollout, but they have been put to rest by the authorities in India. Moving on, more and more international flights are taking off from Indian airports as people are willing to shell out more on leisure travel after remaining grounded for 2 years due to the pandemic. Our next report offers a peek into this.
Regular international flights resumed on March 27 this year after over 2 years of break. Airports were once again teeming with travelers flying offshore destinations for leisure and for work. And it reflected in outward remittances under the Liberalized Remittance Scheme or LRS of RBI. For the April-June period, Indians remitted close to $6 billion. And in this, international travel spending accounted for 48%. After falling significantly in FY21 due to travel restrictions, foreign travel rebounded to pre-COVID levels of over $6 billion in FY22. Under the LRA scheme, all Indians can remit up to $250,000 in a financial year for any current or capital account transaction or both. Nishant Pitti, co-founder of Ease My Trip, had said earlier, since the resumption of flights, there has been a rise in bookings and inquiries for overseas destinations. India allowed over 3,200 weekly international flights from the country during the summer schedule between March and October end. According to the data sourced from Ease My Trip, Dubai, Bangkok, Kuwait, Doha and Riyadh were among the top overseas destinations that Indians travelled during the April-June period. The agency has seen more than 500% consolidated increase in its international bookings over last year period. In terms of upcoming bookings, the online travel company anticipates more short-haul destinations like Thailand, Vietnam, Maldives, etc. could see more visits from India. But what explains this renewed interest in foreign destinations? Online travel agency Booking.com said the money saved during the pandemic by not taking any big trips led to more adventurous holiday choices. According to a survey conducted by it, nearly 2/3 of Indian travelers said they would plan to travel by using the money saved during the pandemic. Over 80% travelers said they will agree to any vacation if their budget allows, and 79% of them are more open to different types of vacation than before the pandemic. Ritu Mehrotra, Regional Commercial Director APAC at Booking.com, says that after 2 years of travel restrictions, travelers are now reclaiming a more positive way of thinking, whether it's an essential part of a self-care regime or the thrill of just saying yes to whatever travel opportunities and experiences come their way. It's all about seizing the day as travel once again becomes an easier choice.
The pent-up demand of not being able to travel for almost 2.5, 3 years, I think is what has created. If you step back a bit, I think the larger phenomenon at play is also the fact that there's a greater respect for travel now and the value it brings to the table. I think we always took travel for granted. We always thought that we could always go whenever we wanted. Suddenly, when you are faced with a situation where you couldn't go and you were constrained to go, suddenly the yearning to sort of go out and experience and all the things that holidays bring, I think were really missed. is this whole thing of what is, the kind of lifestyle that, what are the experiences that are waiting outside. So I think the whole conservative mindset has shifted. We are now more a global mindset, young India. And I think that confidence is also manifesting in the kind of holidays they're looking at, which is why we're seeing the confidence to step abroad, go abroad, versus the inhibition of saying, I don't know what going overseas entails. That confidence is there.
The pandemic has certainly brought about a change in the way Indians look at travel, and it is reflected in their adventurous choices. The pent-up demand, particularly for overseas travel, is also a positive for the overall ecosystem.
Let us move on to markets now. After a short-lived reprieve from June lows, equity markets again seem to be on a downward slope as central banks remain firm on monetary policy tightening. So what does this recent fall mean for investors? And is there a long-term correction in store? Our next report finds out.
Domestic markets slipped on Monday after the US Federal Reserve firmed up its ante against inflation and dismissed talks about any softening in its monetary policy. The US Fed's chairperson, Jerome Powell, reiterated that the central bank will continue with the rate hike cycle to tame inflation. This, he added, will also bring some pain to the US economy. As global markets plunged, the Sensex and Nifty indices declined the most in around a month. The sell-off was led by Nifty IT Index, which shed 3.5%. Besides, the tough talk on rate hikes and likely economic slowdown has also renewed recession fears for the Western economies. Meanwhile, RAL also ended nearly 1% lower at 2,597 rupees despite the AGM announcements on 5G rollout and the new gigafactory for power electronics on Monday, and added to the overall weakness. That said, experts say that rising rates in the West actually be favorable for India. According to G. Chokalingam of Economics Research, for a few more weeks, the Indian market may remain volatile with a downward bias, but eventually it would benefit from anticipated interest rate hikes in the West, which would bring down their aggregate demand and consequently oil prices. On the other hand, with rate hikes expected to be the order of the day, the strength in the dollar weakens the case for foreign inflows. Analysts say the rupee on Monday slumped to an all-time low of 80.14 per dollar. The dollar index soared to a new 20-year high of 109.4 during intraday deals on Monday. VK Vijaykumar of Geojit Financial Services said the sharp rise in the dollar index and the 10-year bond yield is negative for capital flows to emerging markets like India. FPIs are unlikely to continue buying in India in this scenario. Investors should not rush in to buy the dips now and should wait for the dust to settle. Technical charts, however, suggest the outlook for frontline indices remains positive over the medium term.
Indian benchmark indices saw one of the biggest decline on Monday following the weekend speech of Jeremy Powell, the chairperson of Fed, indicating there is a likelihood of further interest rate hike. At present, benchmark indices are trading well above 200 days moving average. For Sensex, 200-day comes at 56,889, and for Nifty 200 DMA comes at 16,975. Immediate resistance, looking at the current weakness, the resistance comes to 58,700 for Sensex, and for Nifty it comes at 17,500. The medium-term outlook for Indian benchmark indices continues to stay positive, and current weaknesses could be an advantage to accumulate respective indices for a long-term bull run.
On Tuesday, global cues will likely dictate the market's direction back home. Rupee level and Brent crude prices will also be tracked by market participants.
A piece of news which, if true, may have given employees some breather from high inflation and uncertainty of markets was trashed by the government last week. So there will be no 4% DNS allowance hike for the employees, as reported in some sections. DAs are like stopgap arrangements between two pay commission recommendations, which are usually implemented every 10 years. In our next report, we tell what exactly is a pay commission and why are they so important for millions. With high inflation nibbling on their purchasing power, year after year, millions of employees across the country have been looking towards the government for some relief. Office chats often veer towards guessing the year when the next pay commission will come and when their salaries will see a good jump. Most feel that DAs are not enough to cope with inflation. A business website, while citing a government source, said that the recommendation of the next pay commission, which will be the 8th one, will not be implemented before 2026. Pay Commission is a body set up by the central government that reviews and recommends changes to the salary structure of the employees. This panel also reviews the bonuses, allowances, and other benefits of the employees. It recommends changes for central government employees and pensioners as well as the defense forces. So, as inflation eats into the purchasing power of money, it is important to adjust salaries of government employees. The Pay Commission is responsible for salary revisions of all the central government employees and pensioners, and its decisions affect millions of people. While reviewing the salary structure, the Pay Commission takes into account the prevailing economic conditions, inflation, fiscal position of government, among other factors. It is not mandatory for the government to accept the recommendations of the Pay Commission. The government may choose to accept or reject the recommendations. Pay commissions are usually constituted every 10 years, and the first Pay Commission was set up in 1946. Since independence, a total of 7 Pay Commissions have been formed. The latest Pay Commission was set up in 2014 and its recommendations came into effect in 2016. Currently, central government employees and pensioners get the salaries based on recommendations of 7th Pay Commission. The 7th Pay Commission has made some important recommendations which were accepted by the government, including introducing a new pay matrix and keeping the annual increment rate at 3%. So, if the Pay Commission's review of salary structure comes after a significant time gap, how do employees get protected from inflation? To compensate for real value erosion of employees' salaries due to inflation, the government periodically reviews dearness allowance or DA. The dearness allowance revisions are also based on the previous Pay Commission and differ from employee to employee.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
The centre had in 2016 claimed that the salaries of employees have risen about 24% after the implementation of 7th Pay Commission. But the opposition Congress claimed that it was just 15%. That is all for today. For more news, views and analysis, please log into business-standard.com. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.